Miningscout auf der Mines Money in London. Wieder suchen wir nach interessanten Gesprächspartnern und ich freue mich jetzt, Jayant Bhandari begrüßen zu dürfen. Jayant, it's a pleasure to have you.
Thank you very much. Thanks for the opportunity, Albert.
Could you please give us a short introduction on your person?
I live in Asia these days, and I used to live in Canada. I lived there for about 10 years. I started working for the junior mining investment company called US Global Investors living in Vancouver, and then I moved to Singapore about 3 years back. I currently advise some institutional investors on investing in junior mining sector.
So what do you think is the sentiment in the junior mining sector right now? Because prices dropped and the prices for the company shares dropped as well.
Well, the sentiment is always bullish, and any of the conferences and any of the fund managers like to have a bullish sentiment about the sector. But that is not always the truth. I have been hearing this bullishness for the last 7-8 years, but market keeps going down, and they keep saying that it is now the bottom. I think the junior mining sector and the mining sector still has to suffer quite a bit. Mostly because mining sector is very expensive. The producing mining companies are very expensive. They are not making a profit. So sentiment is one thing, the reality is another, and I think the reality is that mining sector will continue to fall in its valuations going forward.
So what do you think about the survival of the companies? Who do you think will die first? Production companies or exploration companies that have to do financing, for example?
I touch virtually no producing company today. This is mostly because these companies cannot go into hibernation. You cannot close a mine that easily. It's very expensive to close a mine, and if you close it, it is very difficult to start it. You can't fire people that quickly. So as a result, mining companies are consuming their cash very, very quickly. A lot of these mining companies have a huge amount of debt, and they are not producing a cash flow, which means that in not very long into the future, in my view, a lot of these mining companies will start disappearing or falling apart. The benefit will likely go to the junior mining companies who are smart enough, who are financially astute enough, who are smart enough, who can survive. They will pick up some of these projects, and that will be my way to profit from what is happening in the industry.
So what are you looking for, or what do you recommend for investors to look for at these companies?
Well, firstly, I keep making this mistake all the time because I suffer from greed. What is very important is to make sure that the managements of these companies is good. Do not touch companies whose management is not good. You want management that is honest, management that is street smart, management that understand economics and finance. And that's the kind of people I want to invest with. And then I want to start looking for projects that are undervalued today, because in the current market condition, a lot of good companies, and a lot means maybe 10% of the whole junior sector, a lot of good companies are very undervalued because investors, despite the superficial sentiment, they are very distrustful about the junior mining companies. So if you can buy those 5 or 10% good junior mining companies, then you position yourself to profit hugely, either when an acquisition or merger happens, or some other catalyst happens. And if you see, some of the mergers and acquisitions have happened at a premium of 100 or 200% recently.
So are there some kind of commodities you prefer?
I have no specific attraction to any commodity. I'm an equity analyst, and I think historically we have been wrong about virtually every euphoria on commodities. So 10 years earlier, when I started working in the sector, there was a massive euphoria about gold. People were saying gold would go to $10,000 an ounce or $20,000 an ounce, and that's a bad way to imagine about commodity prices. Then we had similar euphoria about uranium, rare earth elements, lithium, graphite, and more recently in zinc. As an equity analyst, I prefer to just use the spot price or something lower than the spot price. Never ever use higher than a spot price for your equity valuations. It creates a lot of complications if you do so, but trying to imagine a higher commodity price creates a fatal flaw, and the fatal flaw is that you risk your capital. And that is the first thing any investor or any trader should avoid, which is do not risk your capital. So I don't expect commodity prices to be higher than what they are. As I said, as an equity analyst, I don't know enough about commodity prices, and I have seen that even commodity experts have consistently failed in their projections about commodity prices.
But do you have any kind of focus, or do you take into account the regions the companies are located in?
None of those. I want to make money. That's my only focus. So regions and commodities don't make any difference. I'm looking for a difference between price and value. So if I pay less to get more value, that's what I'm looking for. What tends to happen is that mining-friendly jurisdictions, or perceived to be mining-friendly jurisdictions, tend to have projects and companies that are overpriced. So I have a temptation to stay away from what are seen as very mining-friendly jurisdictions. So I don't have a lot of investments in Canada or the US or even Chile sometimes. Usually countries that are seen to be very bad jurisdictions are jurisdictions where people over-discount for the risk. And when you over-discount for the risk, I get better value for the money I pay. So I end up being more attracted to such kind of jurisdictions.
Okay, so what do you think is one of these jurisdictions you're mentioning? Is it more like the African regions, South America?
So currently I'm interested in exploring two new regions that have changed their characteristics, I think. One is Australia, and I have recently written a bit about Australia. I spent a lot of time recently in Australia visiting companies and mine sites. I think two major changes are going to happen in Australia. One is that either their currency will keep falling. That is almost inevitable. A truck driver in Australia can earn as much as 100,000 euros to 150,000 euros per year. That is absolutely outrageous. Now, I'm not saying people should not make a lot of money, but that's not comparable with what truck drivers get elsewhere in the world. As a result, these salaries should fall. This will improve the cost structure of mining companies in Australia. So mining companies that can survive in Australia will benefit from this fall in Australian dollar and fall in the cost structure of Australian companies. That does not mean I'm very optimistic about mining sector in general of Australia, because iron ore and coal is probably a big problem in that country today. So that's one of my good countries. Another country that I'm I have never invested any money in Ecuador, but I'm slowly going to pay more attention because Lucas Lundin and Ross Beatty are investing some of their money in that country. That does not mean I have any money. I have none there, but I am going to start paying more attention to Ecuador.
Okay, thank you very much. It was a nice talk to you.
Thank you for the opportunity, Albert.